Hey guys, today is Friday, April 20th, 2012. It's a little bit early in the day. It's only about 11 a.m. Eastern time, so I'm doing this video a little bit early today. But I wanted to take a look at the SPY to start off with. And in last week's video, I was talking about we had this kind of little head and shoulders pattern. You can see it a little bit better in the futures where it's little head and shoulders. We came down last week. I talked about we had sort of reached our minimum target for the head and shoulders, and we were kind of trading sideways. And last week I was saying that I thought that we were going to break down a little further. That has not happened yet. We're kind of in a sort of sideways sort of action. This is starting to look kind of like a bear flag. And let me show you this interesting trend line. If we take this is the November lows, and we just sort of extend this between these two bottom pivots. You can see this cuts right up through the resistance we've been seeing the last couple of weeks. And so when we zoom in here, we kind of had this move down, and now we're kind of trading sideways. You can see we're kind of in this channel right now. So this is looking very bear flaggish, and when we're going to break down, or if we break down, is to be seen. But what a good indicator would be to kind of follow this is looking at the dollar. And right now, as of 11 a.m., the DX futures are down, and we're basically trading at the bottom of the support area. So if we look at this on the UUP, which is an ETF, you can track the dollar. We're basically at the support area, and this coincides with the 200-day moving average, which is this bottom line here. So we have this triangular pattern. The dollar seems to be coiling up here. If I bring in the squeeze indicator, let's look back at the future. You can see this a little better. I had been saying to our members that this was kind of looking like the dollar was gaining strength and looked to maybe potentially fire long. That did not happen today. We're actually down a little bit. This is what's giving a little boost to the market today. The dollar is down about 0.5%, whereas the market's up about a little over 0.5%. You still have some other names that are down. What's interesting right now is you have, usually when the dollar goes down, commodities and things go up. You are getting a bump in oil today, but gold, silver. Let's just look at silver real quick. Silver's pretty much flat, slightly down. Gold's kind of flat, slightly down. You also have copper FCX, which is actually down. This looks more like a pullback. So this is probably some OPEX sort of volatility we're seeing. So you're not really, you don't want to make too much of it at this point. But what I will say is that, I think the correlation is still there. If the dollar breaks down, the market will rally. So we're at a critical support, and this will probably play out next week. If the dollar rallies back up, you'll see a further pullback in the market. And that's going to kind of go into my theory that I think we're making, another leg lower. Nothing, nothing drastic here, but you do have this pivot around this 134.50 area. But ultimately, I think we probably fill this gap, or maybe even come the gap window in this, this area, this 133.5, 134. So still have those for downside targets. You can still see if I let me get some of this stuff off. You can see, we traded below the 50, and that's this blue line. We're kind of, chopping back and forth between the 50. We came up back to the 20, and so we're kind of in a very tight range here. So, earnings, seem to have been relatively decent, and it's tough to say if companies are reporting actual good earnings, or if they've lowered the expectations so much that they're beating their estimates, which is what basically companies do to make themselves look better. So let's look at a couple follow-up trades from last week I was talking about. Apple's the first one. My May 645, 650 call spread is going to expire worthless today. Please check the last video for the setup on that. Also in silver, I had sold the 32.34 call spread. That's going to expire worthless today as well. If you look at silver, I actually have a small position in some puts here. You have the squeeze indicator. looking like it wants to roll over. I still think the dollar, will affect this. If the dollar rallies, this will roll over. But if the dollar falls, this silver may just kind of chop around. The dollar has been falling, and silver's just been kind of trading sideways. And remember, silver, it does have some sort of industrial value. So if factories and manufacturing's down, silver will be down as well. So I am short silver right now. So we'll see how that plays out next week. One other trade that I took, more as a day trade, it was actually like a 2-day trade, and I talked about this last week, was Aetna. And basically Aetna had broken out on this candle. You can see the squeeze indicator was kind of trending up in the oscillator part, and then it finally fired long. We talked about waiting for the pullback, and we got the pullback right right into this previous breakout level. It actually came down to the 50, and then we kind of broke out since. So this was kind of a short trade for me. I'm actually out of that now, but I wanted to kind of just show how, when you do get this breakout, it's very important to wait for the pullback and wait for the right time. And you can use things like moving averages to sort of take your entry. You could have started accumulating here at the 20-day moving average, maybe accumulated a little bit more here. I played this with options, obviously. But that ended up turning out well. I'm actually, like I said, out of this now. As we, I didn't want to go long into the weekend, but I still think this might be a decent trade. Maybe you get a pullback to the 13-day EMA here, and maybe we move forward. So looks like earnings is coming out next week on Aetna, so I would probably wait till after earnings on that. So let's look at a couple of trades to look at for next week. We're gonna look at two that we're going to be kind of stalking. Halliburton is one, and you can see Halliburton had this kind of breakout a couple days ago on earnings. So that, whenever a stock breaks out on earnings, I look for the pullback, and we are pulling back now. You can see we're in the squeeze. The squeeze is trending higher. What I would look to do is potentially pick up some calls or possibly sell a put spread. I'd have to look at the options a little better, but you can look at some in the money calls. I would probably go out May, possibly June. Basically we hit the 50 here, pulled back. So the first hit of a major, moving average or trend line, you're going to fail. And that's what we did. So, I expect a little support here. And this is around the $33 level, 13 days at the 33, what is that? 33.18, and the 20s right at 33. So if you can get in there around $33, look for some long calls. And again, I'd give yourself a little bit of time, and I would actually go slightly in the money on this. Let's look at if we look at the trade, the option chain, depending on how long this takes, if we pull back early next week, then you could probably get into the maze. And I would look for a delta 70. So you're probably looking at the 32s. These are going for 250 right now. If you want to sort of calculate what those would be, so right now we're trading at 33.77. So if we were to drop 77 cents, let's go back to the option change. If you change this to theoretical price, and we say, by next week, today's the 20th, so let's just say Monday, we want to adjust the date, and then we want to, if the stock were to drop 77 cents, so minus 0.77. You can see that those would be going for about $1.91. So right now they're trading for $1.50, but you may be able to get in those for under $2 for $1.90. That's early next week if the Halliburton pulls back to that 20-day moving average. So let's look at the next one I'm interested in is FXI, which is the China ETF. And FXI, similar setup. Let's look at the chart real quick. And I had pointed this out to our members this week, where China had kind of had this breakout candle, consolidated here. We did not take a trade in this because of we were in some other trades already. But again, the squeeze is moving up. The squeeze actually fired long here. First hit of the 50. We're expecting a pullback. So if we do pull back to, you may not pull all the way back to the 20, but this rising 13-day moving average would be a good level to pull back at. Or possibly you actually have this resistance around the 37.67, let's call it 37.50 area. So if you can get a pullback to here, you might want to take an entry. And again, I would be looking for in the money calls or potential put spread sell. But if you want to look at in the money calls on FXI, if you go with May, again, you want to look for Delta 70s. So you're probably going for the 37s, maybe 36s. Now, if this takes a few days to develop, you know, these only have 28 days left. And so you may want to go with even, you know, the Junes just to give yourself some more time. You're going to pay a little bit more up front, but you know, you'll have more time. That's basically what you're paying for. So, but by going with the delta of 70 here, your intrinsic value is worth more, so you have less time decay to lose there. So those are my thoughts for the week. You guys have a great weekend, and we will catch up to you next week.